Hello, my friends. Hello, dear traders. How is everybody doing today? Welcome back. My name is Angie, and during this webinar, we're going to look at and discuss top famous Japanese candlestick patterns, and we're going to look at how we can use them for price action trading. First and foremost, let's go ahead and check the sound and picture. Please let me know in chat if everything is okay and that you can hear me and that the picture is good as well. I do hope that there are no technical issues today. I apologize for the inconvenience yesterday. My colleague Nick is in chat with me, so you are feel free to go ahead and ask your questions and share your comments and thoughts. And while we are waiting for your replies, I do want to mention that you just want to make sure, take a second and click on that subscribe button, thumbs up, and of course ring on the notifications bell so that you don't miss out on any of our releases and stuff like that. If you were not able to access the live stream from yesterday on the triple rebound strategy, I'm going to go ahead and send the link for you in chat. Alrighty, so all is good. Thank you so much for that confirmation. I guess we'll just go ahead and get started. So first we are going to go over a presentation. I want to show you and explain some of the top and leading candlestick patterns. And then of course, at the end, we are going to look for some trades. Alrighty, let me go ahead and switch to that here. Here we go. So Japanese candlestick patterns. So first, let's go ahead and just look at the Japanese candlestick. I think that this is very important for every trader to know, and this is especially crucial for beginner traders. So what we're looking at is we have a green candle and we have a red candle. We have a body and then we have a wick or shadow or tail on top and on the bottom. So what does this mean? A green candle obviously means that, well, not obviously, but a green candle means that the price has increased. Sometimes the candles can be different colors, but usually they are green and red. So a green candle means that the price has increased. We have two different parts of the candle. We have the body and we have the upper shadow and the lower shadow. If the candle is green and the price has increased, the opening of the price is always going to be the bottom of this body right here. Okay, the closing price of the green candle of an increasing bullish candle is going to be the top of the body right here. What do these shadows mean? These shadows mean that during the specific time, whatever time frame that you're looking at, if you're looking at the 1 day time frame, this means that this candle will mean how the price has changed within each single day. If you're looking at the 1 minute time frame, for example, this is going to show us how the price has changed within every single minute. So the upper shadow is going to show you the maximum, the highest price that the price has reached within that time. And the lower shadow is going to show us the minimum that the price has reached during that time period. And likewise, we have the same situation for a bearish candle, a decreasing, that's been decreasing in price. So on a red candle, it's going to be the opposite. So the opening price is going to be the top of the body, not the shadow, remember that, the top of the body, and the closing price is going to be the bottom of the body. This is the lowest that the price has reached during that specific time, and this is the highest that the price has reached during that time. And now for patterns. I believe this is one of the best known patterns in my opinion. This is called a bullish and a bearish engulfing candlestick pattern. I do have a poll question for you guys in chat, and I'm wondering who said piercing line and who said evening star, but most of you are correct. It means bullish and bearish engulfing, so that's what we're going to go ahead and start with today. So here in front of you, you have the bullish engulfing candlestick pattern. The idea here is quite simple. First, you have a red bearish candle. This means that the price has decreased. And then you have a bullish green candle that completely covers the first candle. This is a reversal to the upside. So, which means that you should see it and that you should use it after a downtrend or after a down movement. And it is best to find the pattern or any patterns at trend line or at horizontal support levels, okay, for reversals to the upside. Okay, so since this is bullish engulfing, we're going to find it at the end of a downtrend. So you want to look for it at a support level. And we're going to talk about this in just a moment. Now, my friends, to engulf means to completely cover something. So you see the green candle needs to open with a gap down, which means, remember, the opening price is here, the closing price is here. So it actually opened with a gap down below the previous candle's close, and it closed above the previous candle's open. So, and also what you want to pay attention to is that the bigger the candle, the green candle, the second candle, the stronger the pattern. So on the next slide, we are, of course, obviously going to have the flip side of the coin. So it's the same pattern, but a reversal to the downside called a bearish engulfing. So we have a green candle followed by a red candle that completely covers and eats up the first one. You want to look for this pattern at the end of an uptrend and consequently a level of resistance. What this means is that traders that trade up really, so what happened here is, so we have a bullish candle, right? And this candle shows us that traders, they really tried to push the price higher, but they couldn't. And they are clear, and there are clearly a lot more traders that are entering down trades, which is why, and they are really serious about changing the direction of the trend. Alrighty. If you guys have any questions, go ahead and ask them in chat. I'm going to go ahead and continue on to the next pattern. So the next two patterns, I want to say they are kind of like sisters or brothers of the bullish and bearish engulfing. In my opinion, they are kind of in the same family, so I won't spend too much time on them, but let me just explain the basics. The idea is very similar. The first bullish pattern is called the piercing line. This pattern is once again a reversal to the upside following a downtrend. So first we have a red candle, and then we have a green candle that opened with a gap down. Okay, so the price closed here, and then the price opened here. This is the gap. Okay, and then the next candle closed. The next candle, it has to close at least above the midpoint of the previous candle. Okay, so pretty obvious. I think that's pretty clear. So once again, we have a bullish candle, a bearish candle. The price decreased. The next candle opened with a gap down, and then bulls pushed it up, and the candle has to close at least above the midpoint of the previous candle. So obviously, as with almost all patterns, we have the same but a bearish pattern. This one is called the dark cloud cover, which you should find at the end of what? An uptrend and resistance level. Okay, so this is a reversal to the downside. The price opened up, so we have the price rose right here. Okay, so we're looking at the end of an uptrend, and then the price opened with a gap up, and bears pushed it down, and the candle has to close at least above below the midline of the first candle. Let's see if we have any questions thus far. These bullish and bearish engulfing patterns must be followed by resistance and support level to work better. Am I right? Yes, Deepak Kumar, you are correct. I did mention that previously, and we are going to talk about that in just a moment. But yes, you do want to look for these. So dark cloud cover is a bearish pattern, so we're going to look for it at the end of an uptrend and consequently a level of resistance. So and gonna go down, and of course we'll look at that in just a moment. The next two patterns are kind of more interesting, I would say, or yeah. So the next two patterns, they're called the morning and evening star. I wish the piercing line and dark cloud cover also had like similar kind of like they went together as like bullish and bearish engulfing, morning and evening star. These are kind of a little bit easier to remember. So let's start with the bullish counterpart right here. Once again, this means that you should see this pattern at the end of a downtrend to open up trades. This pattern is a bit more complex because it consists of 3 candles versus the previous two where there are 2 candles. So first, what we see is we have a big red candle. The second candle, it's better if it opens with a gap down and has a very small body or no body at all, which is also called either a star or a doji. A star can have a small body and small wicks above and below the body. And while a doji usually looks just like a plus sign, pew, where the price does not change at all. If there is a body, a small body for this pattern, it does not matter if it's bullish or bearish. So it does not matter if this candle is going to be green or red. And then the last third candle also opens up with a gap above this candle, and it has to close once again at least above the midpoint of the first candle. Okay, so morning star, looking for it at the end of a downtrend and consequently a level of support. And then of course we have the evening star. We look for this pattern at what? At the end of an uptrend for a potential reversal to the downside to open down trades. So first we have a big green candle, then the next small candle opens up with a gap. Once again, remember, it does not matter what color it is. It can actually look just like a simple cross, a doji. And then the third candle, again, opens up with a gap down from this candle, and it has to close at least above, once again, at least below the midpoint of the first candle. How's everybody doing? Yep. That's wonderful. Everybody's doing fine. So, going back to Deepak, what we were just talking about, my friends, what you have to understand is that there are a lot more patterns. So these are just a few that are really widely used. And on this last slide, I want to explain what I meant by you want to see the price reversal at the end of an uptrend or resistance level, or at the end of a downtrend and a support level. Support and resistance lines, they can be slanted, which is called a trend line, which you can see right here. This is an uptrend line, and this is a downtrend line, okay? And they can also be horizontal, like this. So this is resistance, and this is support, okay? This is resistance, and this is support. So on top of the price is what's called resistance. This is sort of like a ceiling where the price starts resisting higher prices and this price is too high to attract more buyers. While support is going to be on the bottom of the price, sort of like a floor. This is where the price starts being supported because the price is too low to attract more sellers. You can find, and actually you can see right here, so what, this is a, what is this, my friends? Let me know in chat, who knows, what is this? This is a piercing line. And this is a bearish engulfing. Once again, here we have a bullish engulfing, and here we have the, my goodness, piercing line. And what was the counterpart? This is why I forget them sometimes. Not that I forget them, they get me a little bit confused. We have the dark cloud cover. My goodness gracious, please forgive me for that. And right here we have an evening star, a reversal to the downside. Alrighty, so let's see, what else can I tell you about this picture right here? I want to say that so you can find these patterns and you can apply support and resistance levels on any time frames, even on a 1 minute time frame. But you have to remember that the shorter the time frame, the less stable it is going to be, because on shorter time frames we see a lot of movement and sometimes they can be a little bit unpredictable. Yeah, Deepak is correct. Dark cloud cover. Thanks for that. So on higher time frames, the price levels and patterns that we find rely on a lot more data, and therefore they are more reliable. So now that we've discussed like candlestick patterns where we are looking at like 1 to 3 candles that form a pattern, I also want to show you two interesting price patterns. What this means is that we have a pattern out of many candles. So the patterns that I want to show you today, they are called head and shoulders and double top and double bottom. So first, let me go ahead and show you the head and shoulders pattern. The idea here is that the price makes 3 peaks. Okay, so we have a shoulder, the head, and another shoulder. Okay, this is the neckline. Let me go ahead and explain. So the price makes a peak, and then it drops to a level of support. So, okay, this is the first shoulder. Then the price tries to rise again and rises higher, making the head, but once again drops down to the level of support. And then the last attempt once again tries to rise, which makes the other shoulder, but runs out of steam and drops back down to support. So the entry point is going to be the level of support, which the price dropped down to several times. 1, 2, 3, and once it breaks this level, this would be our entry point. Once again, you can see right here, we go, drops down to support, makes it higher, drops down to support, makes it higher. And these shoulders, they should be approximately the same, like equivalent, the same size. And then drops down to support, breaks the support, this support level, and we have an entry to enter a down trade. So this, the head and shoulders pattern, like this one right here, the big picture, and also this one right here, this is where you would look for this pattern at the end of an uptrend to trade down. And you have exactly the same scenario for if you just flip it around, it's called the inverse head and shoulders, and you can find this pattern at the end of a downtrend to enter up trades. So once again, it tries to make it down, reaches a level of resistance, drops down again, comes back to resistance, one last attempt and couldn't do it, so comes back, and this, once it breaks this level, this would be our entry to the upside. Alrighty, and the last pattern that I'm going to show you before we're going to go ahead and look at the chart for possible some trades is called the double top and the double bottom. Very similar situation that you can actually find and see more often than the head and shoulders pattern. So on the double top, the price makes two almost identical peaks, but is unable to break a level of resistance and drops back down to the support level. And the entry point would be, once again, like this, I guess we can call it a neckline. So once it breaks this level of support, this would be our entry point. So we have tries to make it up, couldn't do it, level of support, tries to make it up, so we have some kind of level of resistance here, and then bam, once it breaks this level, we enter a down trade. And once again, it's the same story if you just flip it around, and it's called a double bottom. Just very, I think it's pretty clear. The price drops, reaches a level of resistance, drops, we have a level of support here, comes back up here, breaks this level of resistance, and then we can enter an up trade. Okay, so the double bottom, we look at the end of a down trade. The double top, we look for at the end of an up trade. So I think now we can go ahead and look at the chart and look for some trades. So today we are trading according to price action. Price action means that the actual price movement is the most important. Price action traders, they disregard fundamental factors, the economic calendar releases and news. And aside from trend lines and levels of support and resistance, no other indicators are used. I do want to mention that although price action traders, they disregard the economic calendar and news releases and stuff like that, it's always good to be aware of any like super important releases, just to avoid any unusual spikes while you are trading. So for example, if you know there's going to be like a release that's going to influence the US dollar, just simply trade different currency pairs or other assets. So today we are going to look at the 1 minute time frame, and it's going to be really cool if we can identify some of the patterns that we discussed today, although it's not 100%, but it would be really, really nice. Let's start with, well, I'm looking at gold right now. So the only indicators that we're going to use today are horizontal lines and trend lines. Okay, so right here, what I see is a little mini trend line up, and I can visually see that the price broke a level of resistance. So what would be ideal right here would be for the price to reach this trend line, and then I would enter an up trade. Let me see if we have. Give me just a moment. I'm looking, I'm watching. Trying to see if this is a bearish engulfing. It does look like the price it opened slightly higher and then of course a lot lower, and then you can see that the price dropped. And would this be a level of resistance? No, you can kind of say that this was a level of resistance. Let me go ahead and just show you what I'm looking at. See, it was a level of resistance here. Kind of tried an attempt to break this support, but failed. So yeah, I can say that this would be a cool bearish engulfing. Let's see what the price is going to do. If it's going to jump back above this line. Okay, let me see. You see how the price clearly opened up higher than this candle's close. Oh, very nice bearish engulfing, but let me just see. Let me just watch for a second. Do you see why it's a bearish engulfing pattern? Because this is where the price opened, this is where it closed, this is where it opened, and this is where it closed. So it completely engulfed it. And it was an attempt to break this level of resistance. Let's see what's going to happen. I think I'm going to... Wait. Price action and also trading on 1 minute time frames. Just have to have patience and catch that moment. And if you don't catch it, just disregard it. Don't try to jump in late, because that's not the right way to go. It would be great to open up here, but I have a bearish engulfing, so it's kind of like, what's going on here? Let me see, another attempt to break that level. This opened up with a gap up. So maybe this is not the best asset to trade right now. It's kind of an iffy situation. Right now I was just looking at this level right here as a level of resistance. Let's go ahead and look at some other currencies to see what we're looking at. Let me see, does this look like an evening star? Kind of, sort of. If it closes, let me see, 5, 4, 3, ooh. Why did I enter up here? Because we have that a slight level of resistance, and we've been in a downtrend so far. So let's see if that's gonna go. And we do have, I can't say this is an evening star, or I think we can, because it has to at least close at least below the midpoint of the first candle, and it closed well below it. It's a bit late for that, to go down here. Let's see how's the first one going. So far both are doing good. So once again, if after this evening candle, I should have right away opened a down trade. And once the level the price came down to this level of support is where I open an up trade. Let's see if it's going to go through. Let's see what else we can find. Okay, so gold was in the positive. Okay, so what are we looking at? We're looking at a level of resistance here. But possibly, let's see here. This kind of looks like an evening star. Hey, no. This is AUDJPY. So I'm looking at this level of as resistance. Let's see right here. And right here we have, again, an evening star. This kind of, on the 1 minute time frame, it's kind of hard to like see different price patterns, but I'm not sure if you can see it right here. This could be like a shoulder, head, not quite, but shoulder, and then this would be like an entry point down. So a Euro AUD was in the plus as well. Don't pay attention to this pattern. It's not the best. It's not the best. Okay, so that looks pretty good too. Let's see AUD JPY. Let me see if I can find at least one more. Okay, no. It's kind of a level of resistance right here. I'll try it for 3 minutes. Wait. Opened with a gap down. I was a little bit late for that one, but we have 3 minutes for that one, so let's go ahead and see how that's going to work. Not the most ideal. Okay, let's see if I can find another one. What do we have here? So AUD JPY is doing good, while USD JPY, I'm not sure if that's going to go through. Not sure, my friends, not sure. Alrighty, well, let me see what was happening. Ay, ay, ay. So AUD JPY also good. Let's see what's going on with the Euro US dollar. Still trading at low levels. Let's see, 1.05. Major downtrend on this 1 minute. Where are we on the 10 minutes just to see? Ooh, look at that. It was just going. I'm going down. How strong is this level of, where are we at? Give me just a second, my friends. Oy. I don't even see this. Hold on. We're so far down below. I just don't know. On the 1 minute, I just don't know. You do see that the price has stalled so much, kind of struggling. I don't think I'm gonna, well, if it drops down to this level right here, any patterns here? No, well, with the gap up. No, I think I'm gonna skip this for now. Let's see. Well, USD JPY, both are doing good. Let's see if it reversed or what happened. Yep. So that's pretty good. Remember, level of resistance and support are fantastic. Definitely always try to just work with them and learn to identify them so that you can trade better. GBP USD. I usually look at it with my naked eye. By the time I draw these my levels out, sometimes I miss the trades, but I'm trying to show you what I'm looking at. I don't like this cluster, but yeah, if I see while I was drawing, it kind of came near. You see how it's struggling? That shadow down. Let me see if I can get it. Okay, this is probably going to be my last trade for today. This is GBP USD. Oh, USD JPY, no. That's the first one, did not go through. Oh, but it was looking so good. It was just looking so good. That's all right. It happens. GBP USD. So, my friends, do you guys have any questions? Any questions for me? So GBP USD, I opened up from this trend uptrend line. Although I don't see any specific patterns as far as to what we were talking about. So USD JPY went through. Whoop-de-woo. And I think that was when I increased my the price too. Wasn't it? Yeah, the $20 one went through, the $10 was lost, but as you can see, I still made $6.80 in profit, even though I had this loss right here. How much more time do we have? We have 1 minute and 50 seconds. See, but yeah, this cluster, it can still go down. It can still go down. When the price moves like in a range and it moves sideways, you have to understand that eventually it's gonna break out. It's either gonna break out to the top, or it's either gonna break down to the downside. So you have to pay attention to that, and especially on the 1 minute time frames, this happens a lot, quite often, because there's a lot of head and shoulders patterns can be better. Deepak Kumar is asking to use on the area chart instead of candlestick patterns. That really depends on you. If it's more visible, see that cluster is breaking out to the top, pretty cool. It's just that I personally don't use the area chart, but I have noticed that sometimes the peaks and stuff like that, they are more visible on the area chart, because the candlesticks, you know, they're green, they're red, and they have those shadows and stuff like that. So yes, if it's more visible for you, if it's more comfortable for you to see, then I think you should definitely use it. Well, I want to say that this was a rather good trading session, my friends. What do you guys think? What do you guys think? I do hope that you enjoyed this greenery in my trading. I know we have 19 seconds here, but I think that we can go ahead and say that it's probably going to be good. Seven, 6, 5, 4, 3, 2, 1. Lift off. Fantastic. Alrighty, my friends. So I do hope that first of all, I want to thank you so much for tuning in. I do hope that you guys enjoyed this lesson, and that you understand these top candlestick patterns and price patterns. And I do hope that they will bring you profit. I want to make sure to remind you to subscribe. If you enjoyed my lesson, give me a thumbs up, and of course ring on the notifications bell. Likewise, you want to visit our social networks, because there's a lot of cool trading ideas and trading material there as well. Tomorrow we have our VIP department. They're going to have a stream on the triple rebound strategy. They're going to have a full trading session, so that's going to be pretty cool, and you want to join in. Once again, thank you so much for tuning in. My name is Angie, and I will see you guys next time. Bye-bye.